Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site in Times Square, we have Jay Kaplan. He's a small cap portfolio manager over at Royce Associates. We're going to take a look at can Footwear small caps outrun a recession? Jay, it's great to have you with us here. And it's been interesting, this conversation that's been a narrative in the marketplace is this shift to value from growth. We'll take a look at our first chart here and we'll get your opinion on this. Do you think this rotation is sustainable?
It's really hard to know, but September was terrific after a decade of a small cap value drought. You could see the small cap value really had quite the run in September. We'll see what happens, but there's been more volatility, so that's probably really good for small cap value. There's a fear of a recession, but there isn't a recession. So the fact that there isn't one is pretty good for small cap value. Global fears, good for small cap value, lots of domestic. We'll see what happens.
All right, so now small cap companies, you remain cautiously conservative, not optimistic, but constructive. What do you mean there?
Well, I'm always conservative, right? So you can buy really good companies today at very low multiples because there is recession fear. Although I talk to a lot of companies and I will tell you, to a company, almost every single one, when I ask them, they say there's no indication whatsoever on the ground in American business that there's a recession. So we're worried about it. The Fed is worried about it because the Fed keeps cutting, but the Fed's trying to avoid that recession and we'll see what happens. But if we don't get one, these low multiple stocks should do very, very well.
Do they have the exposure to the US-China trade rhetoric?
Or there's plenty of that. And if we're going to talk about footwear stocks, that's a big part of that, right? We'll get to that. But the China trade rhetoric is a big deal. We don't really know what's going to happen, even though we had this announcement last week. The devil will be in the details, and it's going to be a while until there's an agreement, if there's an agreement. So every time there's a new tweet, the markets move around a lot, and we're going to see what happens.
All right, now to wrap up here, footwear remains an area of interest for you. Why small cap footwear?
Well, they're really depressed because of China. But on the other hand, the consumer in America is doing really, really well. Footwear, if there is a recession, footwear is a great way to play. People like to spruce up their wardrobes by buying footwear. The stocks are cheap. You get nice yields. And even if China is an issue over the next 18 to 24 months, they'll play through that, and that problem will be solved one way or another.
Yeah, it seems to be a real trend for consumer is footwear almost more than any other space within retail.
Well, yeah, because the price points are low, right? You can freshen up your wardrobe and not spend a lot of money. And oh, by the way, there's a whole family footwear business too. So back to school, the kids need shoes. It's wintertime, we need new boots. Kids grow out of their boots. And you get around Easter time in the spring, that's another cycle. So particularly for kids, they're always outgrowing and they're always replacing. So footwear is an evergreen kind of business.
All right, Jay, thank you so much for joining us at MarketSite. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.